Hello and welcome to the channel. Today I'm going to talk about how to audit sales tax payable, and in Canada we call this GST, HST. Okay, so we are going to look at our working paper right here. So this is our working paper to audit the sales tax payable. As you can see, we have the purpose, and we said the purpose is to assess the existence and the completeness of sales tax payable as at year end. So what are the procedures that I'm going to perform? I'm going to obtain the sales tax remittance from the client, okay, because remember, when they file their taxes, they are going to get like a tax return, okay. So we're going to obtain those tax remittance from the client. And number two, we are going to reconcile the sales tax payable per the GL to what we have in the tax return. In Canada, the body responsible for taxes is known as the CRA, which is the Canada Revenue Agency. And then we're going to vouch the payment to the bank statement. So let's look at a summary of the taxes, okay. So we obtain this account from the client's general ledger. So these are the accounts that relates to sales tax payable. They have this GST on sales, GST on purchases, and then the GST payable. So this is the sum of the total of these accounts, okay. So what are we going to do to perform our audit work? The first thing we said was to obtain the tax remittances, okay. As you can see, the client files their sales tax every quarter. So you see quarter 1, quarter 2, quarter 3, quarter 4. So for each of this quarter, we need to obtain the tax remittance, okay. So, and then when we do that, you're going to put the amount here. So when we look at the sales tax return for quarter 1, this was the amount that was there. And you can see this is my audit procedures right here. And in my comments, I put CRA, and you can see the legend here. CRA means I have traced to the CRA tax return, okay. That means I have traced to the tax remittance. And BK means I have traced to the bank statement, okay. So this amount shows that it is coming from the tax return. And according to the tax return for quarter 1, the client was to pay this amount to the government. And how did I confirm that the client actually paid this amount? I agreed it to the client's bank statement, and I saw that this amount was actually paid before year end. So this is good. And then for quarter 2, I did the same thing. I obtained the tax remittance and I got this amount. So in this case, the client was to receive money from the government. And you can see my documentation right here. I said, according to my discussion with the client, the client only received a partial refund, okay. So the government has only paid a partial amount of $9,316. So that means the government is still owing the client some of the taxes refundable, okay. And for quarter 3, I also obtained the tax remittance, and the client was to pay this amount to the government. As you can see, I agreed it to the tax return, and I agreed it to the bank statement, which is BK, and I saw that the client actually paid this amount before year end. And the last quarter, which is quarter 4, the client actually filed their tax return, but you can see OS that is still outstanding as at year end. So the client has filed their return, but they are yet to pay the government this amount. So at this point, how do we determine the total amount that the client should be having in their general ledger as payable? So we're going to perform our reconciliation right here. So as at quarter 4, the client was yet to pay the government this total amount. So we're going to put that right here. But in quarter 2, remember, the government only paid partial amount to the client. The government was still owing the client this amount. So we are going to deduct this amount from the amount the client is owing the government. So this is what we have, 41,465, okay. So this is my audit work. I'm just performing my reconciliation right here. And according to the client's GL, after the year end, like after they already did their return, they had some purchases and sales, GST purchases and GST sales, okay, of this total amount. Okay, so we need to add this to what the client is owing. Okay, so this is the total amount per my reconciliation. Okay, this is the total amount I arrived at, and then I'm going to agree it to what the client have on their GL, which is this. So this is per my reconciliation, and this is the amount per the client's GL, which is what we have right here. So we are going to check if there is any difference. As you can see, there was no difference. Okay, I did my reconciliation based on the tax return I obtained from the client. Okay, I performed my reconciliation right here, and then I agreed it to what the client have on their GL, and I had no differences. Okay, and then I can make my conclusion by saying the audit evidence I have obtained, which is the tax return and the reconciliation I did, they support the existence and completeness of sales tax payable. Okay, so this is how you will normally perform an audit of sales tax. Make sure you obtain all the tax return, and then make sure you perform your reconciliation in a situation where the government is owing the client or the client is owing the government, and that way you can determine if there are any differences between your reconciliation and what the client have on their GL. Thank you for watching the video today. If you have any question, please put in the comment section. I'm going to see you in my next video, and bye.